This is Bazaar Morning Call. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are into the week. This is a Tuesday morning when we are coming to you live as always from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Sonia, and Rima is joining us today as well. Guys, hi, good morning.
Hi, good morning.
What a good run it's been for our markets. 5 days on the trot.
Absolutely. And I mean, all-time highs, the DII buying continues. I think there's nothing to complain really, but that is the time generally when the market decides not to oblige. But in any case, the going has been very good.
The thing to complain is that there is nothing to complain. And that is a valid complaint.
That's a good problem to have.
It's a good problem to have, but I mean, you know, as you said, when you don't see, and like Sanjeev Prasad yesterday was telling us, right, that he can't see anything which will cause the market to fall. Usually that is the point where, because you don't see where it comes from. I mean, something comes from, but you know, we'll take it as it comes. And this morning again, we don't have negative or positive cues to react to because US markets were out on a holiday. But I'll start with yesterday's price action here and where we left off by 3:30. So in the last 1 hour, the Nifty actually saw a sharp pullback, about a 60-70 odd point pullback, and it fell. You know, we were cruising along and we would have sort of ended around 22,200. We actually ended at about 22,120 or so. And by close, by the way, it was a mixed screen. 1,500 stocks were higher, 1,000 stocks were lower. It's not a one-way kind of market, a lot of two-way flows and big liquid mid-caps where there were large volume-led losses as well. So I'll get to some of this in just a bit. By the way, volumes overall, if you look at the NSE 500 as a basket, for the last 4 or 5 days, volumes have been coming off even as the market has been moving up. That is not typically a good sign, but I mean, more on that later. Now, close on the Nifty was just under the previous all-time high, which is 22,126, right? That's where we kind of left off. Many will actually point to this price action from yesterday and say that, you know, this is the third time that the market is doing it. The first time the market got to this level was the 15th of January. And then since then, you had 2 other instances and now this yesterday as well. But it's just one day we crossed over, we saw a throw over, and then the market sold off. Now, just a couple of points, not very much from the US because US was shut, but it was a holiday. But US Treasury futures are indicating that yields perhaps across the board, across the 2-year, 5, 10, will open up between 1 and 5 basis points. You know, if there is one takeaway from the US market, of course, stocks have been doing well. But apart from that, rates, the rates market, the bond market has been buzzing. You know, we are at 4.3% or so on the US 10-year. And that is going to be the focus because data, etc., is coming strong. If you remember, on Friday, we had once again, US markets not got a chance to react to it because one data came during market hours and the other one came towards close. But inflation numbers are the problem once again, and yields are the way the market expresses its reaction. Now, the Nifty, just to circle back to the levels, maybe headed to 22,500 once it gives you a decisive close above yesterday's high, which is about, as I said, 65 points away from where we are right now. I mean, of course, we're at all-time highs, so you can project levels higher based on earlier declines, but 22,500 is one such. Support comes in on the downside at 21,728, which is the 20-day moving average. And then below that, there is a trend line, a downward sloping trend line, which is at about 21,665. So these are the two support levels. You know, I've said this last few days, and the market, by the way, has given you perfect opportunities. Opens higher, opens with a flourish. It completely flatlines. We saw that yesterday as well, and then sees another move higher. On the Bank Nifty, it is still not broken above the previous swing high, which is 46,892. So that is the first order of business for the Nifty Bank. And supports for the Nifty Bank come in at 46,118, which is the 40-day exponential moving average. And then the 20-day, which stands at 45,670. We left off at 46,535. The Gift Nifty is indicating a flat kind of a start. Pullbacks and lower down around the averages, or maybe even slightly higher than averages, but closer to them, I think, is the place to actually buy in, because you are at elevated levels and, you know, if you're trading on a day-to-day basis, better to get some risk reward in your favor, some comfort in your favor as always. Sonia.
Oh, absolutely. And the momentum is intact, right? There's nothing to suggest that the market is going to change track anytime soon. I mean, just look at the data. The Nifty sitting at record highs. It closed above the 22,100 mark yesterday. And now there are a fresh set of leaders emerging in this market. Of course, we've seen Reliance and how it's really led from the front. Yesterday and in the last couple of days, ICICI Bank has started to sort of assume its leadership as well. And now the Nifty is up 600 points from last Wednesday's lows that we saw. So clearly the momentum is intact. There's nothing to suggest that this market is going to see any kind of slowdown anytime soon. The Nifty Bank, though, although ICICI Bank has started to perform, the Nifty Bank is still 4% away from record highs. So let's see whether that provides the next leg of leadership in this market on the upside. There's large money coming in from domestic institutions. There was a big buy figure yesterday yet again. And put together in the month of February so far, almost 18,000 crores has been pumped into the markets just from DIIs. Now, two stocks that I'm looking at very closely. One, of course, is Coal India. After the kind of damage that it saw yesterday, brokerages have cut target prices. There are downgrades on Coal India after the fall in the e-auction premium that we saw yesterday. In fact, Jefferies says that the earnings are set to decline sharply and they've cut their target price to 520 on Coal India. So perhaps, I mean, which is still well above the current market price, but perhaps there could be some more pressure today as well. Apart from that, I'm also watching out for Kotak Mahindra Bank. There are management changes there. KVS Manian has been redesignated as the joint managing director. So that will be another stock in focus, given that you have the Bank Nifty, which is, sort of front foot forward now in this rally. We'll be watching out for a lot of these banks as well. But largely looks like the momentum is intact. It's just that, there is a bit of a breather maybe you can expect today. But I think the trend is on the upside.
Especially given the way the market sold off 60 points from the day's high in the last 1 hour of trade. But just to line up the big cues for the day, it's a Tuesday, so today you've got the Nifty Financial Services expiry. US markets resume trade after being shut yesterday, and tomorrow, minutes of the Fed's January FOMC meeting will be released tomorrow. And remember, last week's inflation data has pushed back expectations of a rate hike. You get the ABB Q4 calendar year 23 results. It's December ending. So ABB India will be reporting their numbers, today. And you spoke about Coal India. By the way, Coal India goes ex-dividend by 5 rupees and 25 paise today. So that will, show a stock decline on the back of this development. In terms of flows, yesterday, because US markets were shut, it was a thinly traded volume. So gross volumes were on the lower side compared to what we typically see. The DIIs bought for the 6th straight session, and they mopped up shares worth 452 crore in the cash market, while the FI selling continues selling about 754 crore, taking their February cash sales to about 14,600 crores. So those are some cues that we'll watch today.
All right. Well, there's plenty to talk about, and we have lots of opinion flowing through this morning. So let's get straight to it. First up, Lawrence Belanco of CLSA says that investors should monitor the relationship between the Magnificent Seven Index, Japan and India, and the US Treasury yields. If the yields move above 4.33 to 4.36% area, if the US Treasury yield continues to fall and the Magnificent Seven Index, Japan and India start to fall too, then it is likely that we have reached a level in yields that are seen as restrictive, even for the idiosyncratic trends in the Magnificent Seven. India and Japan, this would imply a more correlated decline in risk assets as was seen between Q4 FY21 and Q2 FY22.
Okay, well, we've got Sunil Thirumalai of UBS who says that bulk of India's outperformance over the long term has been driven by valuations rather than earnings growth. Strong foreign inflows witnessed across major EM markets ex-China and steady domestic institutional flows in the past couple of months have driven liquidity in the market. Over a longer-term horizon, they see that revenue, operating profits and net profit growth of Indian stocks is ordinary in the emerging market context.
Okay, let's also get you some money market views this morning. On the rupee, you have Abhishek Goenka of IFA Global who says encouraging January trade and services data brightens the prospect of current account deficit printing below 1% of GDP in FY24. Overall, the balance of payment picture looks comfortable despite the recent FPI outflows from domestic equities into domestic debt. The concern on the current account deficit front stems from possible disruptions in supply of crude through the Red Sea. Geopolitical developments will therefore have to be closely watched. Barring any adverse geopolitical development, he expects the dollar-INR pair to remain stable in the 82.70 to 83.40 range over the medium term.
Well, Vishal Goenka of IndiaBonds.com weighs in on the bond market, says that the market is likely to remain muted after the long weekend in the US, with marginal bias for yields to go higher. Inflation and growth data continue to come in strong, the US leading to continued selling in treasuries. Not much economic data this week, which is the FOMC minutes on Wednesday night. He expects a 10-year benchmark to trade between 7.08 to 7.13% range.
And we've got a lot of stock-specific action to track today, so we'll get to it in just a bit. In our special Top 10 segment, we're looking at HDFC Bank, Kotak Mahindra Bank, Deepak Fertilizers, Minda Corp, NBCC, Titagarh Rail Systems, Torrent Power and Paisalo Digital. On the back of negative news flow, you also have Whirlpool and Sula Vineyards. These are two stocks that could open in the red.
All right, Ed Yardini of Yardini Research is joining us now to take some questions. Ed, great to have you with us here. Thanks very much for your time. You guys enjoyed a nice holiday. Back into the mix today. And the market.
3 days of shopping.
That's nice. And, inflation on Friday once again sort of came in hot, right? The CPI earlier and then producer price numbers as well. What's the sense? I mean, is the overwhelming view, the urge is to just ignore all of this and sort of look at the broader trend, which is disinflation. It's coming. It's a matter of time. But along the way, are there going to be meaningful gyrations from the market?
Well, I think this past week there were some meaningful gyrations in the CPI and the PPI that caused investors to be concerned about whether inflation is going to continue to moderate. A lot of the concerns were about the month-over-month changes, and people went and looked at the details, and some of the details were disturbing. But the Fed can't control what happens to specific items in inflation. It's the overall inflation rate that it has some influence over, and the overall inflation rate continues to come down. The CPI, both core and headline, excluding shelter, is right around 2%. The PPI inflation rate is also right around 2%. So I think inflation is still moderating, but I don't think that the Fed is going to be easing anytime soon. I think they're going to use these hotter than expected month-over-month increases to conclude that there's no rush to lower interest rates. And I agree with that.
Okay. Ed, hi, good morning, and thanks as always for joining us. Back home in India, things are looking extremely good, right? I mean, record highs for the market.
Very good, yes.
Domestic institutions are pumping in money. Should one start to get a bit cautious, or you think that there's more to this rally now?
Well, I think India is benefiting, as we've discussed before, from money that might have gone into China and now going into India. And we can kind of see it in the stock markets, right? The Chinese stock market has been horrible for the past couple of years, and the government finally decided to intervene and provide some support. And that's been sort of fizzled out. It doesn't seem to have really boosted the stock market all that much. And meanwhile, India's market continues to go higher. So I think we can look at the stock markets just to get a sense of the kind of the geopolitical developments and how they're impacting the Indian economy versus the Chinese economy. But both the United States and both the United States and India do feel as though they need to take a break here. But they may not. There's so much now interest in investing both in the U.S. and on a global basis, focusing on a country like India, that we may very well see a melt-up in both markets. So that's not something I'm rooting for, because the problem with melt-ups is they're generally followed by meltdowns.
Ed, talking about China, the recent economic data, the holiday spending, the travel spending in the Lunar New Year has beaten expectation. Does that position China perhaps for a tactical rally? And structurally, are you sensing a bit of a change?
Well, I was very interested to see the initial response of the Chinese stock market to this data wasn't all that inspiring. So I'm not sure that the markets over there or investors on a global basis are convinced that just because they traveled more during the lunar holiday and that maybe they spent more in the casinos, that that's going to change the underlying problems in the Chinese economy. And that underlying problem is a serious one. They've got a property bubble that's burst, and we've seen similar situations like that in Japan in the United States, and it could take 5 to 7 years for those problems to finally be behind them.
And, I came across this statistic yesterday. The US market now is 47% of the world market capitalization.
Yeah, huge.
In 2011, that was 30%. So, it's just incredible, right? And by the way, within the US, the 7 large stocks, Microsoft, Nvidia, Amazon, Meta, Alphabet, Tesla, the Magnificent 7 as they're called, that's 25% of the US market capitalization. So this is some extreme concentration, right?
Yeah, it's very concentrated. And here in the United States, a lot of investors, a lot of technicians and strategists are concerned that it is so concentrated that it hasn't been as broad as they would like. But I've talked to some European investors, Korean investors, others who said, if you look at other markets, they're also very concentrated. So the United States has had a tendency to be very broad, but now it's concentrating to these Magnificent 7 stocks. And they're not going to go away. They're making a tremendous amount of money. They are clearly investing in the future of artificial intelligence. So it is what it is.
Oh, absolutely. And your point is taken. World economies are struggling, right? We just heard about 2 of the world's largest economies,
right.
Japan and UK, announcing recession.
Correct.
And of course, the China property market, as you said, is in a bubble. So it'll always be beneficial for markets like India, perhaps, when investors want to put more money to work. Ed, thanks a lot for your time. Thank
My
you for
pleasure.
your time and your views. Well, that's the word coming in on the global markets. Let's slip into a quick break. When we come back, our entire team will be with us to help us with the list of top 10 stocks. Stay tuned. Out for as we head into a brand new day of trade. HDFC Bank will be on everyone's radar after the analyst day. There, Abhishek is with us. Abhishek, what was the lowdown?
Well, the key focus area for HDFC Bank is that they want to sustain a granular and ROA. So the focus is on profitability along. In tight liquidity, they will not chase high-cost deposits in order to, grow their balance sheet. And also, they will maintain healthy LDR, that is lending to deposit ratio, and LCR, that is liquidity coverage ratio. Hence, any constraint in deposit growth may actually moderate the loan growth, but they will not chase high-cost growth. In terms of, threshold with respect to lending rates, that will be passed on with rise in their funding costs in order to maintain their net interest margin as well as ROA, that is return on asset, in the guided band. With the latest development at Paytm, HDFC Bank will be more sanguine to opportunities that they see in the merchant transaction business, which will make economic sense for them. And they will leverage the group's distribution strength, and the share in third-party products will increase going ahead as well. SDB Financial is on track with respect to their intention of listing the subsidiary on stock exchanges. Back to you.
Okay, thank you very much for that. You're also watching for Kotak Mahindra Bank, and here there has been a top-level management rejig.
Well, yes, Rima, as you mentioned, Kotak Mahindra Bank did announce on exchanges that there will be a rejig in the top management. So, Mr. KVS Manian, a whole-time director, has been redesignated as joint MD with effect from 1st of March 2024. Along with him, Ms. Shanti Ekambram, who is a whole-time director, has been redesignated as joint MD with effect from 1st of March 2024. Mr. Devang Ghiwala will become the new CFO, replacing Mr. Jamin Bhatt, currently Group President and CFO, when the latter retires on 31st of March 2024. Mr. Milind Nongar, currently Chief Technology Officer, will take on the additional role of CEO, that is Chief Operating Officer, with effect from 1st of April 2024. Mr. Paul Parambi, currently the Chief Risk Officer, will take on the post of Group Chief Risk Officer with effect from 1st of March 2024. Back to you.
All right, well, that's a whole lot. Abhishek, thanks very much for that. Coming back to you for more. But, along with Kotak Mahindra Bank, the stock to get impacted, actually, maybe even more so, is Federal Bank. The intraday will come up on your screen and basically rallied about 10-12% post the news came through that Mr. Manian perhaps is one of the three names which has been sent to the RBI after Mr. Srinivasan actually steps down. And that basically excited the stock, and it moved up from about 145-ish to 162 levels. So there is a bit of a disappointment, at least in the very near term, as we open up this morning, because that isn't happening anymore. All right, well, we're talking about Whirlpool next, where there is, a very large block coming to the market. Rima?
Yes, so Whirlpool promoters are looking to sell about 24% stake via a block deal. This 24% is 15% base size plus an option to increase it by 9%, and the total estimated deal size is about $450 million. And the floor price for this particular block is at a 7.5% discount to where the stock closed yesterday at 12.30. The stock closed at 13.31. The promoters, in fact, had indicated a couple of months back that they want to sell down their stake, bring it lower in Whirlpool India to pare down their debt. So, that's the reason why the promoters are bringing this stake down.
Okay, very interesting there. Thanks, Rima, for that. Well, Deepak Fertilizers also on our radar. Sonal is here to give us the lowdown. Sonal, hi, morning.
Good morning, Sonia. Well, Deepak Fertilizers is in focus because the company has entered a contract, which is with Equinor, into a long-term supply agreement for liquefied natural gas, or LNG. And this agreement is for annual supplies of up to 0.65 MMSCMD, 65 million tons over a period of 15 years. This is beginning 2026. And in the past as well, the company has entered into such long-term contracts. This LNG will be delivered to the west coast of India, and this is where majority of Deepak Fertilizers plants are. So the cost will be lower as well. The contract to strengthen value chain from gas to ammonia, because gas is a major raw material for the company, and that's why this is a positive news for them.
Okay, thank you very much for that. Yesterday, there was an interesting block deal in Minda Corp, 4.5% stake. Vivek joins in with the buyers list on Minda Corp and also about Sula Vineyards.
Well, that's right. So yesterday during the pre-market, you did see a couple of large block deals happening. First one was Minda Corp. Now remember, this is a retail individual shareholder, classified under public shareholding. Her name is Bella Agarwal. She sold her entire 4.5% stake. But interestingly, the list of buyers is very strong. Kotak Mahindra Mutual Fund picked up almost 2% stake yesterday. Motilal Oswal Mutual Fund picked up 1.83% stake. And the list of other mutual funds were Aditya Birla, Society General, Access Mutual Fund, as well as Monica Garware. So these are the names that picked up the stake as far as Minda Corp is concerned. The next stop, like you mentioned, was Sula Vineyard. It was a CNBC-TV18 news break yesterday that indicated that, there would be a very large block deal happen. And along expected lines, over 11% equity changed hands yesterday. Who are the sellers? Like we reported, Whirling Quest Asia PT sold its entire 8.3% stake. Moserena LP they also sold their entire 3.66% stake. The list of buyers, the only one that's been reported is Morgan Stanley Asia PT. They picked up almost 1% stake in yesterday's block deal.
Okay, Vivek, thank you very much for that. Well, more stocks with news flow. Sudarshan is standing by with that list. Sudarshan, morning.
Morning, Prashant. So, well, I start with NBCC. Company has bagged 3 work orders worth rupees 369 crore in February so far. Next is Titagarh Rail. Money Control has reported that company will start supplying driverless metro train coaches for Bengaluru Metro from the month of April. Torrent Power is looking to invest 2,500 crore to develop 4 projects in Uttar Pradesh. And Paisalo Digital board will consider fundraising in its meet on February 22.
Thanks a lot for that. That's a quick snapshot of all the stocks you need to watch out for. Here's a recap. Stocks with positive news flow. There's HDFC Bank, Kotak Mahindra Bank, Deepak Fertilizers, Minda Corp, NBCC, Titagarh Rail, Torrent Power and Paisalo Digital. While stocks with negative news flow, there's Whirlpool and Sula Vineyards. But also let's take it straight to our commodities editor, Manisha Gupta, to give us a quick roundup of all the action from the commodity markets overnight. Manisha, good morning.
Thank you for that, Sonia. Well, I'll start with what China data has come out with, and the Chinese bank has cut 5-year loan prime rate by 25 basis points to 3.95%. Well, that has given an immediate support to many of these metal commodities there. Of course, the U.S. Fed meeting minutes have signaled patience, so that really seems to be keeping the prices in check right now. If you look at the crude oil prices, we're trading at a 3-week highs right now because of the Middle East tensions continuing to simmer. The street is looking at the gold price is trading on the firmer side as well, but that's perhaps where it ends, because when you look at steel, it's trading at a 1-month lows. Aluminum prices at a 1-month low as well. Copper prices fell 1.5% overnight. Iron ore prices were down a percentage point overnight as well. So while the Chinese bank cutting rates is a bit of a positive, but the market's lately looking at the overall numbers, and that isn't very supportive.
Okay, thank you very much for that. We will slip into a very short break on that note. On the other side, we'll be joined by Amnish Agarwal for some Stock Talk. Stay tuned.
Well, it is the end of the earnings season, but there are some numbers that have come through and we want to analyze them. Forgings reported yet another sluggish quarter this time around. The slow performance, the company, according to the company, they've spoken about weakness in exports, projects getting deferred. And this time around as well, if you look at it, the top line growth has been in single digits, about 7.5%. The margins have actually fallen to 18.6% versus 19.3% same time last year. We have Vidya Shankar Krishnan, who's the Vice Chairman and Managing Director of Forgings, who joins in. Mr. Krishnan, thanks a lot for joining in. You know, last time when we spoke to you, you had indicated to us that, you know, exports are sluggish, you're seeing projects getting deferred, and that that explained the single-digit growth on the top line. Are you seeing any recovery at all, and what is the prognosis for Q4?
Morning, everyone. We've seen a sluggish Q3 and a reasonably, what shall I say, middling Q4. It's not a hot Q4 as far as the domestic CV market is concerned. We see decent traction on the export side. Overall, we are on track to reach about 1,600 crores of turnover for this year, which is what we had kind of maintained the last few forecasts. Okay, it's a little bit down from the 1,800 crores that we had originally targeted at the beginning of the year. But I'm sure that next year we have enough traction on hand to propel us past the 1,800 crore mark, or at least reach there comfortably in this coming year, which is 24-25.
Vidya Shankar, morning. This is Rima here. You said domestic is decent, exports is a bit soft. Reverse. You said domestic is decent, but exports is a bit, I'm getting this wrong. What you were trying to say is that exports has been decent. This is in contrast to
in Q3.
Yes. Now, exports is about 20% of your overall revenue. And decent exports is in contrast to what Bharat Forge had to tell us. And they indicated that as they look into Q4 and further into FY25, they expect growth momentum to moderate even in the export markets. They spoke about Europe in particular, where you have a fairly high exposure. So can you talk about what is this decent export growth that you are seeing, and how confident are you about exports sustaining in FY25?
We see some traction on the export side, particularly coming in from Europe. So many customers have come back to us with higher shares of business, increasing their portfolio offtake from us. As a result, we would see more traction on the export side in 24-25.
Okay. Earlier you had guided for full year margins at 18%. Now, this time your margins have fallen about 70 basis points, coming in at about 18.6%. Do you want to change your full year margin guidance? And also for FY25, what is the kind of band that you're looking at? Because, you know, your margins on an average have been in the 17 to 19% band for the last 5-6 years now, while many of your peers are sitting at 20% plus margins. So when do you think you could see a move out of this band?
In 24-25, we should see a breakout challenging the 20% mark.
Okay, so
which
that
is what
is
we said earlier, that in a year's time we would see margins challenging the 20% mark.
Okay, so by FY25 you're saying margins will challenge the 20% mark. So for FY24, what would your target be?
Better than previous year.
Okay.
Better than previous year. Continuing the momentum with compression on costs, etc. So the margin growth will take place from Q4 onwards, and we should see reasonable margins in Q4 and onwards.
Okay, and FY25, you should hit 20% margins. Just talking about FY25, your revenue guidance is 1,800 crore on a base of about 1,600 crore. So that's a growth of 12.5%. Can you break that up in domestic revenue growth and export revenue growth for us?
I would say 10 to 12% growth across both the sectors, across both the markets.
Okay, so the export revenue contribution should stay around 20%.
Yeah. Yes, around 20%.
You've entered into the SUV sector in the passenger vehicles segment, where you are expecting accelerated growth, because right now it doesn't contribute too much, 5 to 6%. Can you talk about the growth potential, because you're now catering to SUV, which is the hottest segment in automotive?
Yeah, there is a lot of traction for us in the SUV market, and we see that coming in from end of FY25 and onwards. We will be adding a lot of parts in that segment in the coming months. We've already added. Those go into production from September and onwards.
Okay, that's
Basically,
interesting.
H2 FY25 will be start, and FY26 onwards should be strong growth in those markets.
And what about in the EV side? You said you're not looking at electric vehicles until the first half of FY25. Have you made any changes to that plan? And you also had a target of 2,000 crore revenues from EVs by 2030. Are we on track to see that?
As I said, early days yet, but certainly we are working on customer acquisition and building up the base in terms of technology and product portfolio for the EV business to zoom ahead by FY30. So that's a long-term goal, and we are working towards it. Certainly, that looks to be on as of now.
All right, we'll leave it there, sir. Thank you very much for joining us, and good luck, as always, from all of us here. Thank you. Well, we'll focus on markets and the big stock price action. HDFC Bank, of course, has been the focal point. So much debate, discussion, etc. And the management said yesterday that they aim to maintain financial stability and continue the trajectory of profitable growth. This was, of course, put forth by Managing Director and CEO Shashidhar Jagdishan. He was speaking with investors at a conference hosted by Goldman Sachs, and he said that the merger preponed the loan growth of the combined entity, triggering the need to raise funds. Listen in.
We announced the merger. We realized that with the merger will come a preponement of loans on our balance sheet, which is pretty much reflected in the constitution of the share. I mean, we now have around 14 to 15% share of loans on the stock of our balance sheet, as against to 10 to 11% of deposits. We realize that effectively we have preponed the loan growth, so I need to now have that period of I would say, what do you call it, transition time to warm up the engine to raise that amount of equivalent granular sustainable funding to be able to substitute some of the bond maturities so that I can have a reasonable amount of share moving up.
Okay, that's on HDFC Bank. Amnish Agarwal, Head of Research at Prabhudas Leeladhar, is now with us. Amnish, what was your key takeaway from HDFC Bank, and does it change your opinion, the trajectory that HDFC Bank share price has been in?
Okay, thanks. You see, the main thing is we are positive on HDFC Bank in a very structural manner. Having said that, what Mr. Jagdishan pointed out is clearly what is visible, that because of merger, HDFC Bank today is having on its liability side the debt or the bonds, etc., which were actually raised by erstwhile HDFC Limited. So that is one. So once those bonds or those debts mature, then they will be repriced by the deposits, or you can say the saving deposits of HDFC Bank, which will be providing some prop-up to the merchants. But having said that, I think in the near term, what the markets have been worried about is the LDR ratio of 110% plus. And given the size of HDFC balance sheet, you need an incremental 2.5 lakh crores to bring it down to a respectable level. So I think, yes, the intent of the company is good. But having said that, I think it will take HDFC Bank a little bit of time to, you can say, put the balance sheet back in order in the range of, say, well, your LDR goes to 80-90% level, which is, I would say, which will be comforting for the investors. So having said that, I think the current valuation seems reasonably attractive for the long term.
Okay. So does it, in the near term, is there a bit of a readjustment higher happening at all or no? Not really.
You see, the main thing is if your deposit growth, say, hypothetically grows at, say, 20%, but your loan growth is also 16-17%, then your incremental adjustment will not happen at that sharper pace. So there are two ways to it. One, that you either increase your deposit growth significantly, and for which you have to pay higher rate of interest in comparison to what your competitors are paying, or secondly, you have to slow down your loan growth. So unless and until either of these things happen, the LDR ratio will not come down to, you can say, sub 100% level at least.
Okay. Amnish, hi, good morning. I wanted your thoughts on Coal India. There was that fall in the e-auction premium that pretty much spooked the street. A lot of brokerage downgrades that have come in this morning as well. As an investor, how do you react to all of this?
You see, Coal India has seen a very sharp rally in the stock price on hopes that basically India needs thermal power in the long term, and so the production of coal will continue to be one of the, you can say, coal will continue to be one of the preferred mediums, and the government will push for Coal India to increase the production. Now, as far as the pricing is concerned, I think pricing in e-auctions, that always remains volatile, and there are instances when your pricing in the e-auction markets will not show the kind of premium it used to be having over the, you can say, the long-term contractual values. But I think post the sharp run-up which we have seen in the stock price, particularly in the last, say, 3 to 6 months, I think that might be actually warranting some sort of a caution as far as the stock price is concerned. Fundamentally, I don't think that there is anything structural which changes at this point of time, because even if you look at the goals of India or globally in terms of the renewable energy, thermal coal will continue to get more and more investments, and we will require more and more coal to be produced in the country.
Got it. Amnish, two names. One is Federal Bank, just going back to financials for a bit. The stock had rallied about 10-12%. Mr. Manian was one of the names being proposed to take over after the current MD at Federal Bank steps down, but that's not happening. There's Rejig at Kotak, and he's been elevated. So is there disappointment for Federal? And second is Paytm, Amnish. 2 days in a row, 5% higher. Is it also forming a bit of a bottom? Go on.
You see, as far as Federal Bank is concerned, yes, if your change in the management would have taken place, okay, then it would have removed the uncertainty in the company. Now we are back to the square one, and financially the bank continues to be in good shape, but these kinds of, you can say, situations can result in some sort of a correction in the near term in the stock price. However, structurally the stock has done well, and the company continues to look good to us. As far as Paytm is concerned, I think it is more to do with the 15-day window which RBI has now extended to Paytm. Whether they can make the required adjustment thereon, or whether they can tweak the business model, is still something which is I think not clear. Now, if you look at the current situation, stock has taken a big beating. Now, if there is some, you can say, if they are able to make the required amendments in the next, say, 15-20 days incremental, which they have got, or you can say, or some other corporate action happens, I think that is what is driving the stock price at this point of time. So I can't give you more view than this because we don't have a coverage on this.
All right, Amnish, fair enough. We'll come back. Stay with us. We'll come back. We have more questions. Lots of stocks moved around. We'll take a quick commercial break here, though. We connect with Sudarshan and Kush Bora for some trading strategies on the other side. Stay tuned. Okay, welcome back. Let's just take a quick look at what the GIFT Nifty is doing. I think it's absolutely flattish, slightly lower is how things were. There's 15 minutes to go for the pre-open session. Anuj is here in the studios with how he's looking at the trade setup. Anuj, morning.
Morning, Prashant. Like we discussed on Friday, right, the Nifty was looking just like a wow, and we had new all-time high. And what the market has done is shown strength. It's shown signs that it's ready to trade above that erstwhile all-time high. And the reason for that is, if you look at the texture of the market, it made the low of the series on day one of a series. And normally when the market does that, and when the market makes highs during the middle of the series, normally it ends at the highest point of the series. And this time the expiry is on 29th Feb. So it's possible that you end at the highest point. 8 trading days still left in the series. Other factor to look at, it took Nifty 6 days to correct from the previous all-time high of 22,126 to 21,530. It's taken Nifty 5 days now to reclaim that and move above that. Once again, tells you the kind of strength that we have. And take another point. The Nifty is at new high. The Bank Nifty is about 2,000 points off its highs, and Nifty IT is about 1,000 points off its all-time highs. Still, the market is at new high. So it's almost like comparing, like, Rohit and Kohli not firing, but you have the Yashasvis and the Sarfarazes of the world to take care of you. So the market is broadening. That's a good thing. Now coming to trade setup for the day in terms of levels. So on the Nifty, the first support is 22,021, which is yesterday's low. And then based on the options data, 21,916. On the upside, the first resistance comes in at 22,186. Of course, the queues are limited today, so the range might be smaller. And the bigger resistance at 22,246 based on the call options data points. On the Bank Nifty, you got to consider 2 points today. First is it's Nifty Financial Services weekly expiry. That normally has an impact on the Bank Nifty. And second, let's see how the reaction is to the HDFC Bank analyst call. In terms of levels to watch, 46,717 and 46,800 would be the resistance, and 46,317 and 45,870 would be the support points.
Okay, as always, thanks a lot, Anuj, for joining in and giving us an update on what to expect in the market. Well, let's move on. We have Sudarshan Sudarshan Sukhani and Kush Bora joining in to give us some technical cues that we can look forward to today. Sudarshan, hi, good morning. The momentum is intact, but do you think we can build on to our gains? And does a fresh long position make sense now, or is it too late?
Good morning. See, the momentum is intact, but we've had big rallies, and the markets will always pause after such rallies. So today, specifically, I think the market is likely to pause and become choppy. For the near term, the trade is still to be a buyer on dips. There is no reason to say that the markets cannot go higher, at least not yet. So we should be a buyer, wait patiently for sharp dips, 100, 150 point dips from the opening or the high price, and then stay long. So nothing has changed for the Nifty. The Bank Nifty faces significant resistance at the points where it is standing now. So there is no trade there, but the Nifty is worth buying on dips.
Okay, Nifty is worth buying on dips, maybe a day of consolidation, and then a near-term up move is intact. Kush, good morning. Sudarshan, good morning. Kush, what's your view? Indices first.
Hi, Prashant. A very good morning. Well, taking a cue out of Anuj's reference of Sarfaraz, India's winning matches not only on spinning tracks, but also on belters like Rajkot. So even without the FIA participation, the markets are holding up, right? That is all BII magic. I think we spoke of shallow dips yesterday, and that's all that we got in the market, right? So from here on, new supports will come at about 22,000 and 21,800 kind of zones. However, a break above 22,200 could happen perhaps only next week, given how the weekly options expiry data is shaping up. So hold is the call on Nifty with a stop loss of 21,900, and the idea would be to ride this wave. Bank Nifty, as Sudarshan said, 46,800 for me is a number to watch for. Once that is taken out, will we see any kind of trend reversal and a move towards 48,000? But up until then, Bank Nifty remains perhaps like a like position or maybe just a buy on dips, but not a bad idea to avoid 46,800. Once that is taken out, we would look for much higher targets on the Bank Nifty.
Okay, let's get to some stock-specific ideas. Gentlemen, morning. Sudarshan, what would your stock calls be for the day?
Because the trend is clearly up, there's more of buying ideas. Sun Pharma is a buy. The stock has already been in a strong rally. A minor consolidation should lead to an upside target again. 1,510 is your stop loss. Oberoi Realty is my only intraday short. It's in some kind of a mini bear market or at least a deep correction. Intraday short with a stop above 1325. Surprisingly, a company that was very, very popular, say 15 years ago, GMR Infra, is now coming back into play. There is a reasonable consolidation which is on the verge of breaking on the upside. Buy with a stop under 90. And finally, Cummins, which has been in a roaring bull market, again had new highs yesterday. Buy with a stop under 26.30.
All right. And Kush, what about you? What would your stock ideas be for the day?
Two of them, both of them on the buy side. Siemens continues to remain a buy call from our side. The stock's in a steady uptrend, and the momentum indicators are indicating a fresh up move on this stock. So 45, 15, and 4600 are the two near-term targets that we're looking at. 4350 is a good support zone. From the railway space, JWL, Jupiter Wagons, after a nice round of profit booking, the stocks actually started a run up again, and the risk reward ratio is fairly favorable here. 395 and 410 are the targets on the upside. 375 is a strong support zone.
Okay, thanks a lot for that, Kush and Sudarshan. Let's move on. Sneha Seth is joining in. She's the research analyst the derivatives analyst at Angel One. Sneha, hi, good morning. What are the stocks you're looking at this morning, and do you think that the market has more legs to this rally?
Very good morning, Sonia. Yes, the kind of up move we have seen yesterday and the writing what we have seen in 22,100 puts, it seems that any dips shall be bought and we can buy in any dips. And on the higher side, there is a scope because 22,500, 6,000 call options are now attracting traders' attention. So I think if banking index supports from here, yes, we may surely see an up move from this. From here on. And in derivative counters, yes, I'm liking two counters. First one is Jubilant Food. Here, this counter has corrected decently and has formed a strong base around 965, 970 odd zone. And we have seen a decent short covering bounce. I believe we may see follow-up buying coming in this counter. So I would recommend buying Jubilant Food in the range of 495, 497. The target expected will be around 514, and the stop loss can be maintained around 486. Apart from this, I'm also liking Bharti Airtel. This counter has shown a recent profit taking recently and has been recovering from the strong support zone around 220 DEMA on the daily chart frame. So I believe we may see some buying interest from here. So I would recommend buying Bharti Airtel with a strict stop loss of 1117, and the target expected is around 1179.
Thank you very much for that. We'll slip into a very short break. We'll come back with the pre-opening rates. Stay tuned. Welcome back. You're watching us live from the CNBC-TV18 Motilal Oswal studio. A few minutes ago, before the pre-opening rates kick in, Amnish Agarwal, head of research at Prabhudas Leeladhar, is still with us. Amnish, by any chance, at Prabhudas Leeladhar, do you look at Quest Corp? The company which is into staffing, they provide a little bit of facilities management. They announced a demerger into 3 entities, and the stock ended higher.
No, we currently are not looking at staffing companies.
Okay, all right, not looking at staffing companies. I just want to pay a quick sort of attention to Tourism Finance Corporation. The stock, by the way, has had a fantastic move recently. So, in July, September of last year, stock was about 100 rupees, approximately 100. It's now at about 210 rupees. The high this month was, by the way, 250. So it's off the highs, but there is a very large block deal, if you can have the details up once again, which has happened. There was another block deal, and Nimish, by the way, had highlighted this in D Street Chatter a couple of months back. There was a large block deal which had happened at lower prices as well, and this is the second one which is happening at this point in time. A pretty significant percentage equity getting changed hands this morning on Tourism Finance Corporation. Amnish, just a quick word, if you will, on names like, again, I'm not sure if you have coverage. Look at something like a MRPL. 100 rupees flat in 4 days. What's going on? Chennai Petro, MRPL. Is this just momentum, or, they will make significantly higher sort of refining margins, etc. Standalone refiners.
Structurally, what is happening in this entire oil refining and marketing space is that people had started assigning them very little terminal value. If you look at their, you can say, numbers or the financials. Now, with the probability, first of all, some of the large EV players globally, they have cut down on their guidance. That is one. And secondly, there is a growing realization that even if India meets the emission targets over the next, say, 5-7 years, even then, the petrol and diesel cars or the vehicles, they are going to stay. So incrementally, going by the fact that India is growing, there's a need for more fossil fuel also in the near to medium term. There's a renewed interest in all these companies. Now, as far as your refining, because for example, MRPL and Chennai Petro, they are not into the marketing side. And the refining margins, I think they literally they have peaked out in the last quarter, and after that they have softened a bit. So I don't think anything to do with any sharp upsurge coming as far as the refining margins are concerned. But I think it is more to do with the overall structural adjustment which is happening in the entire oil refining as well as the marketing space in India.
Okay. I wanted your thoughts on how to approach the defense space and the stocks, right? I mean, the DAC has sanctioned 80,000 crores worth of projects in the defense sector, and looks like there's going to be a lot of order wins for some of these names. But the problem here is that there is price realization that we've already seen. I mean, the prices have gone up quite a bit. At this point, do you see value and growth in any defense names, or are you cautious now?
You see, defense stocks have been riding a big wave from the last year and a half. Now, we are just a couple of months before we actually head into the voting for the next Lok Sabha. And after your new parliament is in shape, the incremental orders for these companies, they will start coming only in the second half of FY25. Even in terms of execution, usually a few months after the Lok Sabha elections, even if the current government continues, then usually the implementation is slow, unless and until you can say you will be having the full budget and then reallocation and all can't be ruled out. So I think in the near term, if you look at most of the defense stock, I think they have rallied very sharply over the last year and a half. So there might be a pause in some of these names in the interim. In the long term, can these stock give you a CAGR of 15-20% as far as many of these companies in terms of their numbers or sales growth? That usually doesn't happen with these companies. So I would say that the maximum re-rating has already happened, and most of these stocks may be in for some pause for next 1 or 2 quarters. There seem to be a very clear possibility at this point of time.
What about specialty chemical names like a Gujarat Fluoro, Aarti Industries, Jubilant Ingriva? Q3 was another dismal quarter where the financials have deteriorated for the third consecutive quarter. But anything which suggests that there are early signs of a revival?
Your view is that the revival doesn't seem to be, you can say, in place at least for the next 1 or 2 quarters, because the Chinese players have come back very strongly into the market, and China's volumes in many of these, you can say, chemicals, more so on the quantity and bit on the specialty side, they are much more than what India does. So they have got much more economies of scale and pricing power. And that is the reason, if you look at from the last 2-3 quarters, the numbers of most of these companies have been very weak. So our view is that at least for the next couple of quarters, the numbers of many of these players will continue to be weak, except in cases where the companies are having very strong niche and they are able to ride out of this.
By the way, the pre-opening rates are kicking in right now, and they are settling in flat with a bit of a negative bias on the Nifty, just hovering around the 22,000 mark on the index. But plenty of stocks, right? You'd want to perhaps take a look at HDFC Bank after the analyst meet. The focus is now on profitability, definitely. The management saying that they will not chase high-cost deposits. So HDFC Bank down about 1%. Kotak Bank has the management changes as well. KVS Manian is now the joint managing director yet again. So Kotak Mahindra Bank up almost about 1%. And Coal India would be interesting to see how that one shapes up. After the fall that we saw yesterday in Coal India, there is some added pressure that you're seeing this morning as well, down about 0.6%.
Maybe look at Federal Bank as well, Sonia, on the other side, right? I mean, in the pre-open, if that is reacting to the news with regards to Kotak Bank, there's a more prominent reaction, 2.5% lower on Federal Bank coming through right now. And a few others, like put up Paytm. 2 days now, it's been sort of been up for the daily limit 5%. It's up another 5%, I think, this morning. So stocks back up at about 376 plus on Paytm. Look at these stocks, the momentum part of the market, MRPL maybe, right? I mean, humongous volumes every day for the last 4. I think yesterday was the 4th straight day of double-digit gains. MRPL is up another 1.5%. Chennai Petro maybe we could look at. Another one of those names yesterday was PB Fintech. PB Fintech was up about 7-8% yesterday. And by close, I think it was up about 5-6. There was approval from IRDAI for them to enter the reinsurance broking business. Do you have coverage on PB Fintech, Amnish? Any thoughts?
I have coverage on PB Fintech, but having said that, I think this company has been on the forefront in terms of, say, online selling of your insurance policies. And they have got now incremental approvals to expand their business. So I think if you look at the entire fintech space, this is one of the companies which has been doing very well. If you look at, say, past 2-3 years ever since it has got listed.
Okay. All right. So that's PB Fintech for you. Maybe, by the way, smaller mid-cap names. I just wanted to ask you, Amnish, Shilpa Medicare, do you have coverage? Stock was up about 9-10% yesterday. It was, by the way, also part of our D Street chatter list a few weeks ago. Stock's starting another 1.5% higher. Do you have coverage here?
No.
Okay, you don't have coverage there. Sula there was that block which had happened. Sula was a big loser. Maybe we can look at what's happening there. I think Sula entered about 8% lower, was one of the top losers. Maybe there is a bit of a pullback which perhaps comes through. 8 rupees higher is how it's starting. Home First, I'm not sure what the news was. I don't think there was any news, but the stock sold off 7%, especially in the last hour. There was a fair bit of selling pressure came through, starting about 1.25% higher right now. There were other names as well. Rate Gain last Friday saw a very sharp surge, 10%. Yesterday gave back half of it. Taj GVK has had a one-way move. These are all, where momentum has been. So a little bit of shakeout in some of these names yesterday. Sonia.
Also on Z, right? If you notice, the stock in pre-opening is up what about? Let's pull up Z. It's up almost 10%. Yeah, so, okay, 7% now. Yeah. There's a dramatic twist now. The managements are sort of huddling together to make that merger go through in some form or fashion. It's perhaps a last-ditch attempt to revive that merger. But in any case, there's been a lot of volatility around this stock. The Z Entertainment up about 5.5%. But Amnish, very quickly, I wanted your thoughts on SBI because, that one's really been front and center in terms of buying action, trading action, etc. Do you see more upsides here in SBI in the near term?
Yeah, Sonia, definitely. We are very positive on SBI because if you look at the balance sheet, the kind of growth which SBI is showing, and the main thing is that today, if you look at many of these mid-cap PSU banks, the gap in terms of valuation between SBI and some of these banks is very narrow. And in the past also, SBI has traded at 1.7, 1.8 times price to book. Now, if you assign the peak multiple which SBI had in the previous cycle, then the stock has got the potential to even give, say, around 20% upside from the current level. So SBI remains one of the structural picks for us.
Amnish, thank you very much for your time this morning. The pre-open appears to have settled absolutely flat when it comes to the index. Mangalam is now with us for today's Momentumizer stock of the day. Mangalam.
Well, so the Momentumizer stock today is Rain Industries. Why is that? Because yesterday the stock was up 8%. In fact, this month itself, it's up 25%. And if you look at all of 2024, which is a month and a half, it's up 41% at a time when a lot of the mid-caps are actually seeing some profit booking. And the stock is above its 20, 50, 100 and 200-day moving average, very close to its 52-week high, though still a fair distance away from its lifetime high. So that's something we'll have to watch out for. Yesterday, the overall trading volumes were low, but on this stock, the trading volumes were 1.5 times what we've seen over the last 10 days. And if you notice, over the last 10 days itself, the last 2 trading sessions, the volumes have been a lot higher. In fact, yesterday, the number of shares that were traded were close to 3 crore. In previous trading session, there were close to 6 crore shares which were traded, which again is nearly 20 times what we've been seeing in the previous few trading sessions. And a lot of number of shares marked for delivery as well. Yesterday, 62 lakh shares marked for delivery. On Friday, we had nearly, 1.1 crore shares marked for delivery. And this compares with around 10 to 15 lakh that we would see on a regular trading session. So this is a stock which has some momentum behind it with a lot of price move and some delivery back buying too.
All right, Mangalam, thanks very much for that. Absolutely, rain has been sort of raining gains for the last many days now. A strong momentum and some of the internals is explained by Mangalam. Sudarshan is back with us with his 9-10 call. Sudarshan, before I ask you to comment on what you want to put out as trades, Rain Industries has been on your radar. Any thoughts?
No, I'm sorry, I don't track rain.
Okay, fair enough. What are your trades then?
Well, GMR Infra is a speculative buy, but it's a buy with a stop under 90.
Okay, all right. Well, Hormuz is joining in on some MNC stake sales that have taken place. Okay, we'll go across to Hormuz in a bit. But in the meantime, just wanted to point out a couple of more stocks that are moving around. Z Entertainment, we spoke about that, 4.5% higher over there. Dhanlakshmi Bank is up almost about 5%, so keep an eye out on that. But largely, you'd have to say on the index as well, the one pocket that's under a bit of pressure is IT. So Infosys, HCL Tech, TCS are all your top losers in trade this morning. Little bit of pressure, nothing alarming. About a 1% knockdown is what you're seeing. And little bit of profit taking is what you're seeing in the auto stocks after hitting record highs. So M&M, Maruti Suzuki, etc. are down just about 0.6%. Otherwise, it looks like it's going to be a flat opening with a bit of a positive bias. Kotak Mahindra Bank is one stock that the market will react to positively given the kind of management changes that have been announced. And on the downside, it's Federal Bank that is really taking a knock at this point in time. Paytm, by the way, is up almost about 5%. We will hear from our colleague in just a bit that the Finance Ministry will be holding meetings with fintech startups next week. There's an outreach program from the government after the RBI's action against Paytm Payments Bank. So the startup community has been up in arms after what has happened with Paytm. So, you know, the government is going to reach out to the startups. But in a bit, we'll get to that. Hormuz is joining in actually to talk about some large MNC stake sales that have happened. Hormuz, over to you.
Well, MNC stake sales, and they have been plentiful, and there's one on the annual right now as we speak, as Whirlpool India's parent is looking to offload around 24% stake via block deals. They currently still own around 75%, so even after and even if that 24% stake is fully absorbed, they will still own a 51% controlling stake. There are some others that have taken place last year. GMM Pfaudler, where its parent sold 13.5% stake in its Indian entity, which is the listed entity here via block deals. Timken India as well saw stake sales as well in June of last year, where the parent had sold 8% stake via block deals. Now there are some that are under process as well. Last week we had mentioned about Novartis, where the parent company has initiated a strategic review of its 71% stake in the Indian arm that they have, where we've also reported about Dr. Reddy's being in the fray for it. And there are news reports that are suggesting that Sumitomo Wiring is looking to sell around 14% stake that they own in Samvardhana Motherson. So we'll keep that on our radar as well. Other prominent exits that took place last year, one of which was Thomas Cook, where Fairbridge sold around 8.5% stake via the OFS in November last year, and in March last year, Clearwealth sold around 10% stake in Gokaldas Exports. So plenty of exits that have taken place over the last 12 months, and there is a big one on the annual as well. Back to you.
Absolutely. I mean, that's interesting. And, you know, maybe the question we can maybe discuss is why is this happening, right? Maybe prices have gone up quite a bit and valuations are quite high. So it makes sense to monetize, but is there something else? But Hormuz, that's a nice set of data to look at this point in time. But let's talk about more brokerage calls. This is Glenmark and Biocon that we are talking about. Sur is back with details on both these. Sudarshan.
Yeah, that's correct. So there are two brokerage reports from Pharma Pack. First, one is upgrade and another is downgrade. First is HSBC has upgraded Glenmark Pharma to buy from hold, and target is raised to 1100 from rupees 960 per share. Target price indicates an uptick of 28% from current levels. HSBC says Q3 was a disrupted quarter on back of restructuring of distribution market, and recovery in India sales with lower R&D spend bodes well for margin expansion. And for near-term catalyst, it says Glenmark Life Science deal closure will be the catalyst in the near term. Second is Jefferies on Biocon. It has downgraded the stock to underperform from neutral, but target is unchanged at rupees 250 per share. Jefferies says earnings downgrades will continue due to lack of new launches in the biosimilar segment, and weak free cash flow generation and higher leverage will hurt unless company looks at fundraising options, can look at fundraising options like stake sale in biosimilars and Syngene. For Syngene, it says Syngene has a weak FY25 outlook due to lack of major manufacturing contract wins.
All right, thanks a lot, Sudarshan, for that. News coming in on Tech Mahindra. They've acquired 100% stake in a company called Orchid Cybertech, which is in the BPO space, for 5 million Australian dollars. So just keep that in mind. We'll get.
So it's a small acquisition.
It's a small acquisition.
5 million Australian dollars is less than 30 crore in terms of the amount of payout that the company will be doing. But what's significant is this is the first acquisition under Mohit Joshi, who took charge only in December of last year. So 2 months into being the CEO of the company, he's gone ahead and made a tuck-in acquisition. So it's a small acquisition. Basically, this company that they've acquired provides the key services to one of their large clients. And that large client is TPG, I'll just tell you the name, but it's basically
TPG
Vodafone
Telecom.
Australia. TPG Telecom, which is basically Vodafone in Australia.
Right.
So, that's the acquisition, the first one.
All right. Maybe we'll have a chance to speak with Mohit as well at some point during the day. Well, I think Chola Investment is the next one that we're focused on. There's a initiating coverage. Abhishek?
Well, Prashant, Nomura initiates coverage on Chola Mandalam with a reduced rating and a target price of ₹1,000 per share. They say that it's being priced to perfection. They have been standing tall in the last 1 decade with performance which has improved during and after COVID, leading to premium in valuations. So current valuation of about 4.5 times 1 year forward price to book value is at 40% valuation to the 10-year average valuation of Chola Mandalam. AUM growth will moderate. They see AUM CAGR over FY24 to 26 at 24% versus 37% that the company has recorded between FY22 to 24 as per their expectation. So cost of funds will inch up and remain elevated in the near term. They don't expect net interest margin to improve despite the fact that RBI may cut rates. So the credit cost should inch up to an average of about 130 basis point between FY25 to 26 versus 120 basis point between FY15 to 24. They expect ROA and ROE of about 2.3% and 19% between FY25 to 26 versus 2.6% and 20% that the company has recorded and expected by Nomura between FY22 to 24. Back to you.
All right, Abhishek, thanks very much for that. So that's Chola in focus with that initiating coverage from Nomura. I mean, it's a mixed kind of start, as you can see. There's a few seconds to go for the market open. The Nifty is down 20 and the sensex is up about 20 odd points. So, neither here nor there. And of course, the big stocks that we're going to focus on, we mentioned a bunch. HDFC Bank, which is not seeing too much by way of traction. There is, of course, Federal Bank, which is the big mover, as we were highlighting earlier on as well, 6% lower. We'll see how it starts. There is Paytm, which I think was, at least in the pre-open, ended another 5% higher. And there's names like Whirlpool, etc. as well. 22,000, just under 22,100 is where the open is coming through for the Nifty at. And I think for the Bank Nifty as well, it's a slightly lower start, about 150 points, 46,385 or so is where that comes in. Advanced decline, I mean, it's almost almost 4:1 in favor of advances at this point. The Sensex is down about 70 points or so. It's a flattish, slightly lower start, but Sonia's got more rates. Sonia.
So, it's kind of like a Tuesday morning opening, right? Very, very quiet, not really doing much in the market, absolutely flat, with a bit of a negative bias on the Nifty, down about 30 odd points. The Nifty Bank is the one that I'm looking at because, here is where the pressure is really seeping in. So down about 128 points at the opening itself. And that's dragging the overall index closer to that 22,000 mark. Now, just to take it straight to a couple of individual stocks, right? The banks are in focus. HDFC Bank, the company said that the focus will now be on profitability. They will not chase high-cost deposits. But the stock is absolutely flat, not doing anything at all. Kotak Bank actually is the one that could be in the green. Yes, it is 1% higher after the management changes that have occurred, where KVS Manian will now become the joint managing director again. So Kotak Mahindra Bank in focus. Coal India was the big mover yesterday on the downside. Some more traction there on the downside this morning, down about 2%. The fall in e-auction premiums is what has spooked the street. There are a lot of brokerage downgrades that have come in as well this morning. So Coal India in focus. Next up, we have Godrej Consumers. They will divest their entire stake in the Mauritius-based arm Godrej East Africa Holding. It's for a small sum of $3.5 million, but the street likes it. It's up almost 1.5% as we speak. Apart from that, you have NBCC. The company has got 3 work orders worth 369 crores, and the street likes that, up almost about 2%. Torrent Power is looking to invest 2,500 crores in 4 projects in Uttar Pradesh. The street likes that as well, 3% higher now on Torrent Power. Deepak Fertilizers, look at that move, 9% higher on Deepak Fertilizers this morning. There's a 15-year contract with Equinor for LNG that Deepak Fertilizers has signed, and the street is giving it a 2 thumbs up. Apart from that, you have Biocon down 3%. Jefferies has downgraded Biocon to an underperform from a neutral. They have a target price of 250, which is well below the current market price. In fact, since we're talking about pharma, let's take it straight to Glenmark Pharma as well. HSBC has upgraded Glenmark Pharma to a buy from a hold, and they've raised their target price to 1100, which is well above the current market price. The management was also quite optimistic when we spoke to them a couple of days ago. There's about 25% equity that has changed hands on Whirlpool, so that stock is down about 2.5%. It's largely about stock-specific action. If you look at the headline index, it's very, very quiet, just consolidating around that 22,000 mark. And the advance decline ratio right now is well in favor of the advances. So not a bad opening, flat with a bit of a negative bias, but all the action is in the broader markets. Back to you.
Well, sectorally, auto and IT are the two pockets where you are seeing weakness. So the Nifty Auto Index is down close to about 0.5%, as Eicher Motors, Bajaj Auto and M&M. All three of them are staring at a cut of 1 to 1.5%. And IT too is on the back foot, with TCS and Infosys leading the way with a cut of close to about 1.5%. So sectorally, that's the drag today. And the gains are led by media and realty. Media and particularly Z Entertainment, the stock is up 6.5%. But the Nifty Realty Index is up nearly 1%. A couple of the other notable movers, where there is no news, but you are seeing a lot of price and volume action. MRPL is a laggard, 3.5% gone on that. SJVN is under pressure. Rain Industries is down after the recent up move that we had. It's up 24% this month, but today it's a bit on the back foot. On the gaining side, you've got Zaggle Prepaid, 9% and very large volume. Tourism Finance, where there was a block deal early in the morning. That stock is also up and about in trade. PTM has gained nearly 5%. And a couple of the other Z Group stocks like Z Media too, seeing some buying.
Absolutely. And so, in terms of advanced decline, it's a pretty good start, right? Although the market on the index is down about 50 points, that is the Nifty, right? But in the broader market, as you guys have been pointing out, there is a lot happening on the upside. So I think the last one mentioned was Zaggle with a 10% pops. That's a big one. But look at Jindal SAW, which is up about 6%. Large volumes, 556 on Jindal SAW. Minda Corp is another one, which was, of course, there's news there. 3% higher, 437, 438. It was a mover yesterday as well. Look at EID Parry. It's got a bunch of businesses. Sugar is, of course, one of them. And it's been an underperformer, laggard really, but it's starting to make a move. 7%, 7.25% move on EID Parry now. Azad Engineering is up 5%. Shilpa Medicare, we were talking about this with Amnish earlier, 5% gain there, 434 on that name. Delta Corp ended 4% higher yesterday. And I think there were some comments from Rajiv Chandrasekhar yesterday at a conference here in Mumbai where he said, well, the government essentially wants to promote wants regulations so as to make sure that the industry sort of grows properly. Not sure if that's the trigger here, but Delta is another one which is up 3. There is Sequent Scientific, which is up about 3%. Tourism Finance Corporation, TFCIL, there was a large percentage block deal which happened in the morning. That is up about 5%. I think that's the daily limit for TFCI, Tourism Finance. TV18 Broadcast starts about 4% higher. And I can go down the list, but then volumes are a little lower. On the downside, there is of course Whirlpool, which we mentioned. Coal India, which ended down 4.5%, is down another 1.5% this morning. Federal Bank is a top volume-led loser with a 5% cut today. There is Rain Industries. It's down about 2% right now. Biocon is coming up. We just put out the brokerage call with, I think it's a downgrade on Biocon, 3% lower on Biocon. There is Patanjali, which is down 4%, Eicher Motors, which is down 2%, HAL, which is down about 1.5% as well. So that's the up and down, but market breadth overall, numerically, of course, is vastly in favor of what is doing well and what is higher. Vineet Samre is with us, Head of Equities, DSP Mutual Fund. Vineet, great to have you with us here. Appreciate your time here on CNBC-TV18 as always. I mean, just a word on HDFC Bank, if we can begin this conversation with Vineet. Because the analyst day happened yesterday, there was some. I'm not sure if you had a person there, and what is the feedback that you got. But what really is your sense? Because it's also important and pertinent because you got the rest of the market where valuations are running generally higher or much higher than historical valuations, and you got this large group which is banking, and within that HDFC Bank where valuations are reasonable. And money is coming into the market. You've got to put money to work. So this question then becomes important. Go on.
So good morning, Prashant, and there is some limitation to the extent to which how much I can talk about the companies which we may be transacting or we also have in the portfolios. But broadly, if you look at our portfolios, we have been in general, I think positive on the private sector bank, and within that, HDFC Bank is one of our holdings in the portfolio. Now, overall, I think from the time the merger took place, I think the expectations around the way in which the banks the bank will sort of start showing growth, and also the consolidation timelines of the consolidation, the benefit which the banks will derive. I think those have got a bit sort of pushed out to maybe beyond the in general expectation. But what we believe is that we feel that, like you mentioned, overall, if you look at the markets, I think the market is has pushed up the valuations for most segments. Banking as a pack here, we are trading at reasonable valuations, including the bank under consideration today. Maybe the recovery process may take time, but this is a good time to accumulate these high quality franchisees and hold them on. I think the way to create wealth over a long period of time is to sort of look at high ROE businesses which have sustainable growth prospects in the future. And only point is, I think the biggest arbitrage one has the time arbitrage. Information arbitrage is something which people have lost out. So I think from that perspective, it makes sense to be part of this large franchisee is what I believe.
By the way, many stocks hitting fresh highs despite the lackluster opening. Indian Hotels is at a fresh high this morning, and it's been one of the strongest stocks this year. It's up 25% already this year, and it's at a fresh 52-week high at 546. Jefferies put out a note yesterday where they said that the double-digit revenue growth is something that can continue in FY25 for Indian Hotels. And given the kind of robust wedding season that we've seen this time around, the trends continue to be positive. Vineet, I wanted your thoughts on some of these spaces, right? Whether it is aviation, hotels, hospitality in general, consumption, discretionary spending, all of these spaces are picking up quite a bit. You think the run is done here? If someone's missed this bus, is there more to go?
Yeah, so unfortunately, we have missed out on participating in some of these businesses, like you mentioned, the hotels, aviations. Because in general, when we looked at their long-term history, we figured out that these businesses they don't generate high ROEs, and they are very cyclical in nature, and it's very difficult to then take a slightly longer-term view on some of these businesses. And today, the cycles for them are very, very positive. But what we have sort of focused on, I think, are some of these retail malls which have done well for us. The consumption trend has been good as far as the premium and the urban consumption trends are concerned. We have also looked at some of these QSRs, which in the past has really done well, but currently they are undergoing some bit of this slow demand momentum, and we believe that the opportunity size is huge. We are currently in terms of our overall exposure as from within the food industry, QSR is a very small proportion, and we believe that as the urbanization grows, as income grows, the consumption trend should pick up. So I think over the next few quarters, maybe, and I've been saying this for a while the consumption trend broadly looks slow, but this is also a good time to gradually build some of these discretionary names, is what I feel. But only caveat being that we would like to focus more on businesses which structurally are able to produce decent ROEs over a long period of time.
Okay. So you think QSRs are turning the corner, like Jubilant FoodWorks, Devyani, Sapphire, Restaurant Brands, Asia. What about the other portion of discretionary? Names like a V-Mart Retail. We know Titan is doing well, Trent is doing very well. But some of the other pockets like Vedant Fashion, Nykaa, here you have seen the impact of slowdown in discretionary spending. What about that aspect of the consumer? Are you bullish on it?
Yeah, so just to clarify, when I spoke about the QSR, I was not hinting at, they're turning around. I'm saying that they're still in the midst of a slowdown phase, but that's also a good time because the stocks otherwise you don't get these stocks at maybe decent valuation. So I'm saying that over a period, as these companies go through a bit of a slowdown phase, each of these companies, and the ones which you mentioned also, these are high quality franchises. And as these companies are facing challenging times, maybe at certain point in time, every company will find that a lot of these are getting discounted more than required in terms of the valuations when we look at the long term averages. And at a point when these becomes attractive enough, it will be good to start accumulating those in the portfolios. Is the strategy which we are trying to deploy.
At a time when most global economies are struggling, right? We just heard about Japan and UK entering into a recession. China's property market is pretty much in a bubble. India is standing tall, especially with the growth projections. Now, I understand that it's not as simplistic as we expect it to be. Money is not going to directly move into a market like India. But given that we have this kind of a situation, do you think India has the upper hand even in 2024? And could that be one of the reasons why this uptrend could continue?
So, see, first of all, let me admit that as far as our country is concerned, we will have relatively much better growth metrics as compared to some of the global peers. But at the same time, let me also mention that when we look at the long-term growth trends for India, India does well. It does exceedingly well when the global countries are also doing well. So it only adds up to the momentum. And if we have large economies actually struggling, or you have some of these developed economies go through a slowdown phase, I would want to say that India would not remain unaffected. We will also see some bit of the impact of slowdown. And if we observe the third quarter results, which just have got announced, a lot of the companies which are export facing, maybe IT, some of the bearing companies which have exposure to their global parents, they are selling their products there. We have seen considerable amount of slowness in the business, and which is where I believe that some amount of impact we will also carry through, just that relatively we should be better off. Since I've touched upon the quarter three result, let me also mention that, let me just also mention that if we look at the last 3 quarters trend, the top line has been decelerating and we've come down to a single digit growth number. While the earnings momentum is strong, the benefit of the margin tailwind has flowed through, but that also will come in the base now. And hence, to me, I think it is very important that as we go towards the next 2 or 3 quarters, the sales momentum has to recover. Otherwise, we will see slowdown in the earnings as well. So I think from that perspective, next 2-3 quarters remain important, where the valuations are at highs and maybe the earnings start to look a bit slower than what we had seen them in the past.
All right. Vineet, just one more a point I wanted your thoughts on. I'm not sure if you wondered about this, but for example, Whirlpool is looking to sell about 24% of stake in its Indian arm today, right? You've had so many other deals, Novartis, for example. There was Timken before that, etc., etc. And these are not investors where the lock-in is finishing and they're selling. These are parents who are actually monetizing their stake in Indian subsidiaries. I'm sure, when these blocks come, you would have been shown some of these deals and asked for interest. But what's going on? Is it foreign companies realizing that valuations are very rich and make sense to monetize some of it, or is there something else?
So you're right, Prashant. I think not just the foreign companies, but we have also seen a slew of Indian promoters, encashing through the last 1.5 years as the markets are hitting highs. And maybe when we look at the valuations, most companies in their history, I think they are trading at the high point in terms of the valuation. So I think at this juncture, many promoters would like to encash. There are also other reasons, maybe the parent company globally are facing some stress. The balance sheets are leveraged and they want to maybe, moderate those things. So other aspects are also there, but most importantly, I think as we see that most of the companies are trading at peak valuations, these promoters are willing to encash, and that also to me is a hint that where there is a lot of frenzy. The retail guys are becoming really very bold in terms of buying stocks. it also at this point we should also try to caution some of the investors that stick to quality, stick to being more rational, and just try to take hints from these events, and then take a long-term view as far as the investments are concerned.
All right, we leave it at that. Thanks a lot for joining in. Appreciate your thoughts. So stick to quality and stick to growth. That's the word coming in from Vineet Samre. But for the market, it's very quiet actually. To be honest, the Nifty is not doing much after yesterday's big run. It's just sort of holding on to that 22,000 mark. And there's quite a bit of traction on the downside in auto stocks this morning. So don't lose sight of that. But one space that has been doing pretty well is real estate. Brigade Enterprises is in focus. The company reported decent Q3 numbers. The sales value gained by 56% year on year and the realization surged by 36%. The stock has gained 100% in the last 1 year. To discuss the demand trends, we have Pavitra Shankar, the MD of Brigade Enterprises, who joins us now. Pavitra, always great speaking to you on the channel, and thank you for taking the time out. I wanted to start by understanding what Q4 is looking like so far. What kind of traction are you seeing? And, what's the outlook on bookings by the end of FY24? Where do you think the company will be?
Hi, good morning. Thanks for having me. Traction is looking really great. We launched a large project at the end of last quarter, 2 million square feet that was doing really well. Actually, we launched almost 2.7 million square feet last year. We are on track to launch another 2.5 or so this quarter. And I think we are going to show some pretty good numbers by the end of this quarter. While we are not going to be able to give guidance, I think the trend on ground is very good demand from end users as well as investors in apartments as well as plotted projects across our target markets of Bangalore, Chennai and Hyderabad. So it makes us confident that we can continue to invest in land and look at new projects and continue to put our launches as quickly out there as possible. I think the market is looking very good for the short to medium term, and we should take as much advantage of it as possible right now.
Are you going to take advantage of the upbeat market with further increases in pricing or realization improvement? Your 9-month realization for residential is up 36% and is now close to 9,000 rupees per square feet. In FY25, for instance,
Yeah, so the realization is a combination of the projects that we've just launched. So the project that we launched last quarter was at a substantially higher price realization than some of the portfolio that was on that is currently being marketed. So therefore, it showed a higher realization. And every quarter that will be the case. So this quarter, as we're launching a plotted project, we may see a slight dip in those numbers. So it's very reflective overall of the quarter launches that have happened. But that said, if I look at a 9 months comparison to the prior financial year, we still see a 20% increase. And I think that's reflective of the overall sentiment for the real estate segment. While Brigade per se has also increased pricing, I think it is reflective of the market as a whole in the residential sector. And I would say Bangalore is a huge part of that. Bangalore, up to a couple of years ago, I would say you could very easily find something between 6,000 to 6,500 rupees a foot, which in my mind was completely undervalued as a market. So given where the city stands in terms of an economy and an employment center. So I think there's a correction there for Bangalore that was long overdue. But in general, the residential market is extremely healthy and allowing us to take up pricing. That said, in future, I don't know if we can continue to expect, 20 to 30% increases. Those are pretty hefty.
Pavitra, hi, good morning. One of the things I've heard from sort of relatives and a lot of family in Bangalore is that the new houses have all become not Brigade but otherwise generally houses have all become smaller, but the rates have all gone up. That's kind of a
Actually, on average, I think houses have also gone up larger in terms of floor plans, and demand from customers tends to be looking for that extra bedroom, which is still, I think, the effect post-COVID. And even in our portfolio, we seem to be launching slightly larger units. So that's anecdotal, maybe. I think overall unit sizes are increasing.
I think that's the case not just with Bangalore, right? Throughout the country. That's a big problem we're facing in metros. But talking about metros, a lot of your peers have now entered the Mumbai market, and there's so much happening in Mumbai with the connectivity going up, with the Trans Harbour Link, the Mumbai Metro, Coastal Road, etc. At any point, either in this financial year or next, would you look to enter Mumbai?
No, definitely not. Plan is to continue our focus on Bangalore, Chennai, and Hyderabad. I think over the last 2 years, we've added significantly to our Chennai land bank, and that's a market we feel very confident about. Although we do feel it is overlooked by many in the segment. So I think Chennai is a stronghold for us. Hyderabad also is an area of focus. Our strategy is that these three markets can afford us as much growth as Bangalore, and that is something that we want to focus on, not just from a residential perspective, but also office, retail, and hotel. Since we are a multi-domain company, the same investment that we make in land banks, in partnering with landowners, with licensing, and so on, it's important for us to make use of those networks that we're doing and go deeper into the markets rather than do multiple projects or maybe one-off projects across different markets. But that said, that's all naturally Mumbai, NCR, these are all very large markets. It's something we will always keep an eye on, but in the short to near term and actually medium term, our focus is to remain in the south.
What about hospitality? Despite Q3 being a seasonally strong quarter, a pickup in your occupancy to 73%, the top line growth has been in single digits, 8%. Going ahead, do you think hospitality, you could look at it, the hospitality segment could see a double-digit revenue growth?
Yeah, we are pushing on that front. I think it's always a balance of ARRs as well as occupancy. The hotel segment has done well. Hospitality, if I look at a year-over-year performance, it has done extremely well. So it could just be a bit of seasonality and specific reasons why. But we're very confident about the hotel segment as well. I think the amount of domestic travel that is really supporting all of our business hotels is excellent. We are also planning to invest further in the hotel sector. Currently we have just under 1,500 keys under operation, and we are looking to add another 1,000 keys to that over the next 18 to 24 months.
Okay, so you're adding another 1,000 keys to your hotel segment, and currently you have 1,500 keys under operation. Got that. Will there be any fresh investments that you're looking to make, any kind of debt that you'd want to take on for this kind of expansion that you're looking at, both in the hotel as well as in the residential space?
Yeah, so in the residential sector, so far, we've not really required to take on debt. Instead, we've been paying off the residential debt. Today, we're pretty much at a zero debt level for the residential sector. On the hotel sector and I guess office, like anytime you're investing into these longer term assets that have a longer life where you're leasing up and operating them, we are going to need to use debt for that. And we're comfortable at the debt levels that we are today. We will also use a mix of internal accruals from the cash that is getting thrown off from the residential sector. So as of today, our debt equity ratio is 0.69, and we're quite comfortable at the level of debt that we have, also knowing that we will need to take on more debt to support the growth of the portfolio. But we have always done that in a fairly conservative way. Even our the interest rates that we pay have gone up naturally along with the repo rate, but have not grown as much as others have seen. So I think overall we have a pretty conservative approach towards debt, recognizing that you need it for growth, but also taking it in the right way.
All right, Pavitra, we'll leave it there. Great conversation as always, and good to hear you on CNBC-TV18. Thank you very much for joining us. Good luck. We'll take a very quick commercial break here. We are going to be joined by the CFO at 5-Star Business Finance to discuss their business outlook. Stay tuned. That conversation coming up next.
Welcome back. 5-Star Business Finance is the company on our radar. The company reported numbers on 1st of February on budget day, so we didn't get quite chatting with them. But just to recap the numbers, strong AUM growth, but the asset quality has deteriorated. The company's gross NPA stood at 1.4%, while the net NPA stood at 0.65%. Srikanth Gopalakrishnan, the CFO of the company, is now with us. Thank you very much for joining in. This is Rima here. So the first question is on asset quality. We have seen some pain at the lower end of the economy. What is your guidance and outlook on asset quality? Any numbers on the gross NPA and net NPA?
So very good morning to all the viewers, and thank you, Rima, for having me on the show. I would take a little bit of a, disagreement with your statement that the asset quality has deteriorated, while the NPAs has shown a little bit of a spike, and this is largely to do with, some floods that were there in Tamil Nadu, and more importantly, the coastal Andhra Pradesh also had an impact. So there were a little bit of impact on the incomes for a few days for the borrowers, due to which they were not able to pay a little bit of the EMIs that fell due during the month of December, which is why it just went up from 1.35 to 1.4%. But having said that, if you look at the numbers for the profile of borrowers that we are operating, I think we are still at a very, very attractive, NPA ratios. If you compare it with any of our peers or even the large NBFCs, I think we stand out exceedingly well. What we also have done is we have increased the provision. So that's why if you look at the net NPA ratio, it has actually gone down from 0.68% to 0.65%. The guidance that we have typically been giving to the market is a steady state number of anywhere around 1.5% or thereabouts, which is still a very, very attractive ratio for this market, given the kind of yields that we are operating in and given the profitability that we have. Our ability to absorb this is very high. You should also look at this in context of the RBI circular that came in 2021, where today we are completely at par with NPA recognition in line with banks. So it's a daily tagging of NPAs, and once an NPA, it's an ever NPA till the loan completely gets off to a current stage. So it's probably the most stringent methodology to compute NPAs. But if you really look at 90 DPD, we will probably be 30 basis points lower than what you're looking at. It will be about 1.1, 1.15%. So from that perspective, these are attractive ratios, in our mind. A little bit of deterioration primarily because of few days of impact of floods.
Okay, that's a comprehensive explanation. Srikanth, hi, good morning. Prashant here. Now, your sort of customer base is essentially, small business loans, right? Shopkeepers, very small ticket size loans there. We've heard, from other companies, etc., we speak with, that there is a little bit of stress, and that's been true for a while, it's not new, that there's a little bit of stress at the lower end. The point is the market is so vast, the demand for credit is so large that you can pick and choose the good and avoid the bad, right? As you've told us in the past as well. But incrementally, is it going to start to add up a little bit? The environment is not getting easier in that sense, right? So, for example, I'll tell you, we had Amitabh Chaudhary of Axis Bank who was telling us, it was a broad statement he made. He said that in the next 6 months, you will see credit costs rise. It's impossible for them to stay this low. It's cyclical, nothing large, nothing alarming, but that's the direction. Would you agree in your context, Srikanth?
So, Prashant, like you said, I think it's a very broad statement that somebody has made. And the definition of credit or MSMEs in India that we use itself is a very, very broad term. And like you rightly put, we operate in the really lower end of the segment. We're probably a couple of notches above what a microfinance institution's clients are. So we lend between the 3 to 5 lakhs. And what we believe, and we've not been operating in this segment for the last 2 years or 5 years, we've been operating in this product and segment for the last about 20 plus years. What we believe this segment is all about is the resilience. While you will always see some bit of skews in their cash flows at points of time, these are people who are largely cut off from any kind of economic shocks, or even if there is an economic shock, they are probably the last to get impacted and the first to bounce back, primarily because of the fact that these people provide essential services to common man, without which people like you and me cannot be living. So we lend to shopkeepers, we lend to barbers, we lend to medical shops, we lend to hardware shops. So it's extremely essential for a common man to thrive. While there could be a little bit of skews here and there, we really don't see these customers defaulting. And more importantly for us, the way that I see it is these are all loans secured by the property of these borrowers. And this property represents their entire life savings. So it is not like for frivolous reasons, these borrowers are actually going to go and default the loan, or you will probably see intentional defaulters in this segment, because for a 3 lakh to 5 lakh loan, it's actually not worth committing a fraud. So our understanding of this segment very clearly shows that, like I said, we are going to be operating around 1.5 to there are about 10-15 basis points this way, that way of NPAs. But in context, what you should also look at is our DPDs across the various buckets has been getting better. our 30 plus is actually dropped from 8.9% or 8.95% to 8.35%. So you're actually seeing, people getting a lot better in terms of their repayments. Our processes are also, we have fine-tuned a lot of process. Today, we actually measure the unique customer collections as against measuring the overall collection efficiency. So a lot of these things will actually end up having very good numbers. So, our credit costs again have been muted because we took a lot of credit costs, especially during the first and second waves of COVID. So if you look at our credit costs for this year, now the 9 months, I think we were at about close to 40 basis points or so. But again, we keep guiding the market that you should be a little more conservative, not because there is a stress that is getting built up, but it's also good to build up some provisions during good times that you can use during the rainy times. So, about 60-75 basis points of credit cost is something that again our P&L is extremely capable to absorb.
Okay,
But not
can you
because
give
of
us
any,
an over? Sure. Can
sorry,
you
not
give us
because of any environmental stress.
Got it, got it. Mr. Gopal Krishnan, can you give us some numbers on what one can look forward to in terms of both disbursement growth for this year and next?
See, this year on year, I think our disbursement growth has been at about close to 40% or so. We have done close to 3,500 crores of disbursements for this year. Again, Q3 has been almost flat to Q2 because, like I said, about 6-7 days of Q3 was lost to rains in Andhra Pradesh and southern Tamil Nadu. But we expect this number to pick up in Q4. So definitely, I think we will see at least about 25% growth in disbursals to come through next year, 25 to 30% growth to come through in disbursals. And again, we have also been guiding the market in terms of a 31 to 35% kind of a AUM growth that we are looking at. And both of these things at this point of time appear extremely achievable.
So, okay, so AUM in FY25 should be in the vicinity of about, between 11 and 12,000 crores, sir?
No, Prashant. So we will probably end this year at about 9,500 to 9,600 crores. And if we're looking at least 31, 32% growth from there, that's at least another.
Okay, 30%. Okay, 30% in FY25 over the 9,500 in FY24.
Exactly. So we are probably looking at maybe 12,500 crores, 12,000 to 12,500 crores.
Okay, 12 to 12,500 crores in AUM. By the way, last time we spoke, you said that you had borrowed, cost of borrowing had gone up about 10 basis points. This is at the end of December. What have you seen so far in this quarter, Q4?
See, Q4 incremental cost went up by about 7 basis points. Our Q2 cost of incremental debt was 9.5. That went up to 9.57. Again, largely, I would say, primarily, because we are taking monies from some marquee names, we are getting quantums. So there's a little bit of premium that people are actually building up on that. But again, we are also guiding the market for a slight increase to come through. As you would be aware, there was a circular in November 2023 by RBI, where they have increased the risk weights. So that may have a little bit of an impact as we go forward. But our clear thought process is to get the right set of lenders to diversify our borrowings. And if that means there's going to be another 20-25 basis points of impact on cost, I think we are fine.
All right, Srikanth, we'll leave it there. Thank you very much for joining us. Appreciate you being here on this channel, and thank you very much for your time here today. Well, that's 5-Star Finance. Now, IRCTC is the next company. It reported a good set of third quarter numbers. Festive season in the third quarter aided business, and we saw, pretty much performance across the board coming in. Soft to okayish. We have Sanjay Kumar Jain, Chairman and Managing Director at IRCTC, joining in to take some questions. So thanks for joining us. Best ever numbers in the third quarter. Could you tell us so far? We're mid-quarter through in the fourth. Has the momentum continued?
This quarter has shown highest ever revenue and both profit also. In all our segment. So it's a good thing, and we are planning to continue it this year and take it to the next level.
Just wanted to get some numbers in on volumes. You did an overall volume of about 115 million in Q3. Is this the run rate likely going ahead?
Yeah, you see, numbers are just a projection, which may or may not come true. But I will just give you the brief of the background in which we are working. Like IRCTC is working in railway segment largely, and ticketing, what you are talking about, is basically railway ticketing. And you see the growth in railway sector, and Vande Bharat train already announced, 7541 already running, so many such trains are going to come. So certainly it will add to my ticketing business, and not only ticketing business, this will provide us the catering business, rail near, and the tourism sector.
So from rail near particularly, what kind of revenues can you generate, and any further capex that you're planning to put in there?
Any business has some kind of like capacity utilization, particularly when you are running a plant. So what we are doing at the moment, that we are adding to our capacity to fill the gap of the demand and supply. And I am happy to inform you that 2 days back only, we have added 75,000 bottles per day. And we are again going to add very soon another plant with 75,000 capacity, maybe by July end.
So you also have a tie-up with Zomato. So could you talk to us about the growth outlook in the catering business going forward? Last quarter, you did 500 crores there.
As you correctly told, that Zomato on e-catering side is already on our platform. And you see, again, I will tell you, you see the sector. Railway sector per se, economy is booming. Railway sector per se is also booming. Capex is invested. Many rolling stocks are coming. Many lines have come. DFC is also coming. So that will also release capacity for running passenger trains. These all things will lead us to like how much we can grab is the real challenge. The growth per se is not, I am not seeing any hindrance to that. Rather, it's very encouraging.
What's the outlook on the Bharat Gaurav trains? They've been performing well. So could you give us some color on the way forward?
You see, we have already entered into MOU with Uttarakhand government, and more states, we are already planning, under the things is under discussion, which I can't reveal at the moment, but with other state governments also. So it's a very encouraging response. You see, we are already running 10+1 Bharat Gaurav trains. And there are many more in pipeline because of our MOU with the state government.
All right, one final question. By when will you target 5,000 crore rupees on the top line?
I told you that figures are only, projections are only figures. What we are targeting is not numbers. What we are targeting is the growth and how much we can grab the market already available with us. And for that, we are already putting our all efforts. And I see similar kind of, or rather better kind of result prospects in future. Thank you very much.
Okay, thanks very much for joining us with those details. Appreciate you joining us here on CNBC TV18. Well, that's IRCTC. The market, by the way, is come off a little bit more. We were down 50. There was a sharp recovery. We were down 20, and now we're down 70. So, the pressure is there, at least as far as the Nifty is concerned. Market breadth is also completely evened out. It was positive. Now it's, the advance decline ratio will tell you almost 1:1 on the advances to decline ratio at this point in time. So it's a mixed kind of two-way flow, as we were describing in the morning as well. And that's what we saw towards close. That's how we left off things yesterday in trade. Well, now sources tell CNBC TV18 that the Finance Ministry may hold meetings with fintech startups next week. This move comes in after recent actions taken by the RBI against Paytm Payments Bank. Parishad has got more details. He's joining us right now. Parishad, good morning.
Well, yes, this is an important story for the fintech ecosystem in the country, and the importance of the meeting that is going to be held next week. The meeting will be chaired by the finance minister. Officials from other ministries are also likely to be present. The importance is twofold. One, to emphasize the importance of following all regulatory compliances. The government is likely to urge all fintech startups to make sure that they are complying with the law. Secondly, to assure them that if you are complying with the law, then there is nothing to be worried about. The government is fully backing you. This will be a meeting in a way to reassure the fintech startup ecosystem that this is a priority area for the government. The government stands by startups in the country. It wants more digitization to take place. And this is a sector that will continue to be encouraged by the government.
All right, Parikshit, thanks a lot for that. So fintech startups definitely in focus. But moving on, HDFC Bank aims to maintain financial stability and continue its trajectory of profitable growth, says the Managing Director and CEO, Sasidhar Jagdishan. Speaking at HDFC Bank's group event, he adds that the merger preponed the loan growth of the combined entity, triggering the need to raise funds. Take a look.
Ever since we announced the merger, we realized that with the merger will come a preponement of loans on our balance sheet, which is pretty much reflected in the constitution of the share. I mean, we now have around 14 to 15% share of loans on the stock of our balance sheet as against to 10 to 11% of deposits. We realize that effectively we have preponed the loan growth, so I need to now have that period of I would say, what do you call it, transition time to warm up the engine to raise that amount of equivalent granular sustainable funding to be able to substitute some of the bond maturities so that I can have a reasonable amount of share moving up. We have been operating our loan deposit ratio in a reasonably healthy range of around 85 to 90% or 80 to 90% depending on which year it is, and it's a long-term average. Obviously, we have grown, which means that the growth rate in our deposits and loans have been rather on very similar pace of growth. Going forward, whatever we do will be very similar to what we have done in the past, which means that we'll maintain a very healthy incremental LDRs. As I said, it's a balance of how much I want to deploy and how much I want to repay, and that itself, since these are all high costs, it sort of gives you a kind of a massive fillip to your profitability.
All right, well, let's do one thing. Let's take a quick commercial break on that note. The Vibhor Steel Tubes, by the way, has listed, look at that. It's a 190% up move that we're seeing on listing for Vibhor Steel Tubes. What a fabulous listing there. I don't think anyone expected such a big premium to the issue price. 150 was the issue price, and look at that, 446 is where the listing has come through.
The bankers get it wrong. I'm not sure the bankers left it intentionally. I mean, this much, I mean, this is incredible. One of the best listings that we've seen, I think, in the recent past. Absolutely, no doubt. Look at the volumes, about 1.3 million shares, I mean, traded already right at listing.
I think this space is doing very well, right? Its peers are APL Apollo Tubes, you have Rama Steel Tubes, High-Tech Pipes, APL Apollo Tubes, etc. have been big movers in the recent past. Even if you look at the fundamentals, right? I mean, 3 years back, the company's revenues were about 500 crores. Today in FY23, at the end of FY23, the revenues were 1113 crores, and 6 months FY24 as well, the strength continues, and the profitability. The FY21 profits were about 60 lakhs, and by the end of FY23, they're sitting at 20 crores of profit. So fundamentally as well, the company is strong, it's in a good space, and hence it's delivered on listing day. Let's slip into a quick break. On the other side, Manisha Gupta will put focus on the commodity markets.
All right, 60 points lower on the Nifty is what we have, 22,063. So this is a bit of a breather coming through this morning. Prakash Gaba is with us. Prakash, good morning. Good to have you with us here. Dips typically, I mean, yesterday also we saw that dip, right? The market opened higher, flatlined, and then moved up. And then, of course, from the day's high, there was a bit of a pullback again. But what's your sense, Prakash? What to do on the indices first?
Yeah. As far as Nifty is concerned, it's open lower, it went down lower, and it bounced back. So far, looks okay to me as long as today's open holds. And Nifty has opened somewhere closer to 46,600. So as long as that's on, it can go into a resistance zone. The resistance zone on Nifty, I would say that possibly it's around 22,150 or so. So it can go up. Bank Nifty looks, I think, slightly more stronger, can go up to 46,700 to 47,200. But Nifty and Bank Nifty both are on divergent mode. So had the Bank Nifty fallen, then Nifty would have fallen more. But looks like Nifty could hold because the Bank Nifty still looks strong to me. So I would say Steve is stock specific and try and take stocks on the long side on the banking front. And however, I like two stocks here. One is Indian Hotels. That looks good to me. Very good chance trading at 550. Possibly we can see move up to 560, 65 zones. Stop below 545 on Indian Hotels should be fine. Second stock that looks good to me is Power Grid. Basically into a buy mode. 285 is the level that it's trading now. Possibly we'll see level closer to 295. May take a day or two for that. I think it's heading there. Stop on Power Grid should be around 280.
Okay. All right. Thanks a lot for that, Prakash. Have a good day. By the way, those are some stock ideas from Prakash Gaba. Just want to point out once again, Vibhor Steel, right? Pull it up for you. It's had a fabulous listing in case you missed that one. And the joke doing the rounds is, iska naam Vibhor Gold hona chahiye tha, not Vibhor Steel. That's the, that's the up move that we're seeing in fabulous listing there.
I mean, look at that. What, 450 now, right? So that is it's I think the listing of the year so far. I think without a doubt. And if you go back, you'd find comparables, but this is absolutely fantastic coming through. Well, let's sort of talk about commodities now, and let's bring in Manisha with what's top of mind for her. Manisha, good morning.
Morning, and thank you for that, Prashant. Well, I'm looking at the crude oil prices, which are trading at a 3-week highs right now. If you look at the prices within this year, we've gained up by nearly 6% already. And there has been a lot of geopolitical premium that we've seen building up in case of prices here. In the latest report that the street is watching out for, well, there is Israel raiding Gaza Strip. The second hospital is out of service now. There also is Houthi fighters claiming responsibility for an oil tanker which was headed in for India. Over the weekend, we already have seen reports of 4 vessels hit by drones or missiles within the Red Sea itself. And this is what has added premium to prices. Apart from that, the street is also looking at strong travel numbers that have come in out of China in the previous week. Remember, it was the Golden Week holiday for China, and those travel and aviation and on-road numbers, all of them have been on the positive side. But that's exactly where the positive news kind of ends. And these are the factors keeping the prices in check. There is a report from IEA suggesting that the global supply will hit a record 103.8 million barrels per day in 2024. And much of this extra supply growth will come in from the non-OPEC countries. Within OPEC as well, when you look at the spare capacity, which is at an 8-year highs of 6.4 million barrels per day. So if and when that demand comes back, you already have higher inventories, higher production. US production is at an all-time high, and the OPEC spare capacity at an 8-year highs as well. So there is a very little chance that you could be looking at 90, 95 or prices beyond that in the near term at least. An ANZ report that came in last evening suggests that global crude surplus is what they are looking at in 2024. And then apart from that, we already are dealing with those slowdown reports that have been coming in from Japan and Britain. So the demand, in addition to China, within these economies as well seem to be slowing down. Another interesting report that I want to put on screen is from Morningstar, which says that the global demand will drop to 88 million barrels per day by 2050 from 99 million barrels in 2019. While there are various reports coming in, but just imagine that from 20 years down the line from here as well, it's not that the global demand for crude is going off too much. It still is expected to stay around that 88 to 90 million barrel per day, and that is in 2050. And that's something in sense of long terms. If there are no investments that are coming in, the street does believe that $80 or about is where you could be looking at the crude oil prices sustaining for a slightly longer term as well. And this is even taking in account that by 2050, 57% of all vehicles would be EV there. So the markets do believe that it is going to be for this quarter around 80 that you could be looking at the crude oil prices sustaining within. And for this year, the range clearly is between 78 to 88 as of now.
Right, Manisha, thanks very much. Interesting numbers, interesting stats there. Thanks very much. Well, the Nifty, by the way, is sharply recovered. There's a very sharp spike which is sort of developing, and it is underway right now. So we were at 22,070 and we're at 22,095. So 25 points pop up coming through on the index in the last under 5 minutes or so. But we continue to track markets for you, but we'll take a quick commercial break here. On the other side, our special segment, Indianomics. My colleague Lata will connect with Sameer Goyal of Deutsche Bank to decode key trends in Indian bond yields, the US inflation data, both on the consumer side and the producer side, which came in last week. Stay tuned.